Good day. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Tuesday, the 23rd of March, 2021. And we're sitting here right now at about 6:20 in the evening. Now, if you feel that you're in one of these patterns, you're going up, you're going down, you're really not going anywhere, welcome to the futures markets. That's pretty much what is going on. It's not you. It's not that there aren't other things going on. You're just not getting a lot of follow-through one way or the other in these markets, and that has become the norm. In addition, when it does move, it seems to be going at times in vertical moves. This won't last. It's not the norm, and you just let it deal with what it has to. Now, the event of the day, of course, was listening to Fed Chair Powell and Treasury Secretary Yellen talking before a House Financial Committee, and I walk away with a couple of things. Number one, Ms. Yellen is baked in to this 28% capital gain tax. I think she's joined completely into the Biden administration on that. I think that our Fed chair does not think inflation of lasting duration is going to come into the marketplace. I believe that he thinks that we'll get a pop because spring is coming, COVID vaccines are getting out there, people will go out, and 100 million of the checks for the COVID relief, according to President Biden, are now in the mail or in people's accounts. So that money's being spent, and you'll see that if you go outside, people are in stores doing whatever. Of course, you always ask yourself, how far can $1,400 or whatever a family gets goes? I pray the people are using it where it should be going, not for stock market investing. That's my own thing. All right. So let's go to the chart action and see what we have. First off, you're down now 0.36% for the week. That includes the early evening trade in the S&P. You're still over the 18-week moving average of closes, which means to me the bias is up. As long as the market's over that, I have upside bias. I use it as a filter. Gives me an idea what I'm looking at in other places. When we take a look at the S&P, that rally sort of stalled that we recently had. And in fact, if anything, now it's failed because you're getting a pattern of lower highs and lower lows. The definition of a downtrend is that. But I like to put filters on it so I have an idea of where you're at. The battleground should be the 18-day average of closes. That number's 3887. Why? Again, with that moving average. This time it's the 18-day moving average. When the market is over it, my filter is that it filters that trend down and it says, no, in order for that to be a real downtrend, the bias should be down too, and you'd have to be under that number. You don't have it, so I have the two things fighting each other, and the battleground's probably going to be that 3887 level. When we come over to Bollinger Bands, you'll notice you haven't been able to hit a Bollinger Band in a very long time. You have to go back almost to January to do it. So the market is not using that as a resistance point. It's using what I call window envelopes as a resistance point. And what the market is also doing is in momentum, well, it's now overbought. So I have a market that's overbought, gearing towards that 18-day average. A close under 3887 will get the bears out of the woods, I think. They can get more aggressive in there. But the reality is we seem to be stuck between here, and that's what the market's looking at. In the NASDAQ, you're getting enough of a rally now where you're knocking on the door and saying, I'm overbought. Now, I define in the slow stochastics any overbought condition is anything over 70, either leg. When they're both over it, well, it just confirms that you're overbought to me. What is the pattern here? It's not a trend. You have a higher high, a lower low. That's that pattern I've been telling you, just moving up and down in a wave here, very difficult to catch. And the weakest of the indices is suddenly now one of the weakest. Why? This was the strongest, and now because of the lost embedded reading that we got today, my guess is with that, with an outside day down, the market's going to try to make a run at 3190. Well, now it's 3280, let's call it, 32,080, the 18-day average of closes. And why not? It's got the momentum going for it there. I'm not seeing anything on the chart that looks bullish. It's a contra-trend trade, but that seems to be where the market wants to head. In the Russell, you're in a downtrend. You've been in a downtrend. You were fighting for it. If you take a look yesterday, if you got back and under that 18-day average, you're in it. What's the target? The lower Bollinger Band. You're making headline news towards it as you're not even oversold. I think the pros will be fairly aggressive on selling at 22.55 with stops over that 22.91 level. In the VIX cash, well, the market couldn't get to the lower Bollinger Band. Again, it is embedded. So that means even when it rallies, it's still running out of momentum. And of course, that's the problem here. The market doesn't want to go one way or the other, and people are not buying this as insurance. You can see that. The market's just dying there. In the bond market, I've been looking for the market to do what? Well, if you take a look, here's your embedded reading and you're losing it. So the 18-day average is a logical first resistance point. Seems to be what the market wants to do. If it takes out 136.20 in tonight's high, 156.20, tonight's high is 156.19, you negate this level of the downtrend. Now, this has been a nice downtrend. Overall, it's not been with momentum. Momentum has given you, if you will, grief along the way. And it's while price has gone down, momentum wasn't a helpful character. In the 10-year note, you hit the lower Bollinger Band once. Bingo! Game's going right back from the looks of it to the 18-day average. And you're getting high enough tonight to knock out these lows and say, okay, I'm going to have a higher high and a lower low pattern. In the dollar index, the dollar is trying to say it wants to go higher, and I know there's a lot of people that are bullish this dollar, and I can't argue with them. The pattern is higher lows, higher highs. It is overbought. Support's going to come in if it pulls back to the 18-day average, but I'd look for that number very quickly to get above that last break low. So I think it's still acting in a good bullish sense. In the euro currency, what's it got going for it? I mean, if you can't get the vaccines out, and all we keep hearing is that Germany, Italy, France, they're taking next stages to lockdowns to April 18th. I'm not friendly to that. That's a month from now. And you can see that market sinking away on that type of news. British pound has problems too. The market, are they going to be cut off on vaccines? The EU is trying to do that right now. We'll see what that brings about. It is very oversold. Do you go short under Bollinger Bands? Well, if you are, you're joining the 5% of the people that think it can stay there, with the 95% saying no, and the odds are against you. In Bitcoin, we've been looking here, at least I have, if you have my updates, for the market off that high to give you the possibility of getting back to the 18-day average. In the process, the trend turned down on the swing line. Now, if you close under 54,238, that could be the first sign that the market wants to work even lower on this. The differential between Brent and WTI crude, well, it's come from over the 360 to just above the $3 level. That's one heck of a move that it's done. But all the energies have come apart, and they did it in quick order. Look at that. The only way to get short this market was over that 18-day average, as I see it. And it was just one of those rules that I don't fight the bias of a market. But here it goes. It's down there. It's into support. You know what I'm going to tell you. You don't stay under Bollinger Bands very long. I love that gasoline came down. I'd like it to go even further. Why? Because ultimately, I think it's a buy. Ultimately, as the spring season gets going and other parts of the economy move on. I mean, we're just in March, folks. People really haven't begun driving yet. We're dying to. I have cabin fever. I don't know about you. I'm hearing offices are opening. They're having galas downtown Chicago to get people wanting to come back. That'll be a hard thing until you get the herd mentality going. In other words, get enough vaccines out there. But if once that happens, there's no reason that the office life won't come back. And that tells me something else. While people move to the suburbs and all, in the cities, oh, they're dead for a year, and they were. They're coming back. If you're looking at the rents going on in New York, they're on fire now. People are coming back because it's just a question of time when the theaters open, restaurants are open. Same thing's going to happen in Chicago, and all of a sudden you go, I like that city life. The key is we got to get COVID under control. As for nat gas, you know what I was telling you. I thought the market had washed out here. Because you lost the embedded reading on this break, I don't see why you can't make a run back to 266.70. So that is a trade that traders have to take a good look at. It's not the without risk, but it is a contra-trend trade. So with that, I'm Ira Epstein. I do want to remind you that if you're looking for market information, it's not from Cortina, I can tell you that when that came up. But if you're looking for market information, we certainly try to give it to you. If you go to our website at www.iraepstein.com, you'll see our free offerings. You might also want to take advantage to go to our research section and take a look at how I put out the morning subscriber videos for the SPDR and ETFs. And with that in mind, by the way, we have gotten our new software. Tomorrow I use another piece. We think we have found the right software so that by the time I'm through recording in the morning, it instantly posts it to an area where I take it and post it to our website. So in theory, within 15 minutes after me having recorded, it should be available in clarity for our clients to see. That will cut down the viewing of that by about 30 minutes. So that's a big move for us, just about there. I'm Ira Epstein. You have a great day.